What's going on, everyone? Happy Thursday and welcome back to Chart Request Live. I hope you guys are all making a bunch of money today. My name's Patrick Dunawilla. I am the editor of the Chart Report, and today I'm joined by Jason Pers. Jason, how we doing today?
Hey, glad to be with you, Patrick. This is going to be a lot of fun. I'm a big fan of the show. Always love seeing so many cool charts and just going through them, and it's always a lot of fun for me. So this is going to be a fun one. Excited to be with you today.
Yeah, we have a lot of fun with this show. First of all, you don't have to prepare for anything, so that's nice. You just come on here, share your thoughts, so that's always a plus. But we also end up getting a lot of good ideas from here too. Our listeners are very good chartists themselves, so we always walk away with a few good ideas. But what do you think about this post-election reaction so far?
So it's to me, it's very obvious, right? Like this is an obvious thing, and kind of I got so many questions from clients or people writing into All Star, like whatever it was. I had people asking me if Trump wins, what will happen? If Harris wins, what will happen? And really, what we see if we just look at the data, most of the time the market just goes up afterwards. But the one thing I always try to keep in mind is usually the things that people are saying will go up after the election usually do badly, and things that people are saying will not go up after the election usually do well. Think back to 2020. That's a great example of it. Everybody said if Biden gets in, energy's going to crash. Financials are going to crash. You want to own solar and technology, and then that was the best 2 year period for energy in many years, and same with financials. So and a lot of the times, the things that start to trend before the election usually continue to move nicely after. We saw that breakout in small caps, the KRE. So all of these things already started to move, which is awesome. And that's kind of leading us to think, at least myself, to think, hey, this is a small cap rally. It's going to be a broad rally moving towards a more of a reflationary style environment. What are you seeing out there, Patrick?
Yeah, I mean, you said obvious, and it kind of was, right? I mean, we've seen this cycle so many times that if anything, leading up to it, the fact that it was so obvious and that we've seen this pattern so many times, if anything, got me a little superstitious of it. But
Same, actually.
yeah, but the reaction is really what we expected, and it is kind of that like it's like the market's kind of exhaling all that uncertainty, and really, I mean, all the right things are ripping. Small caps, transports had a really nice breakout yesterday, um, and all the areas that you want. And while caps are working, you're also seeing some of the biggest stocks just starting to break out, like Amazon and things like that. So it's hard to be bearish. It's hard to be bearish. But you want to dive right into these requests? We got a
Yeah,
pretty
let's
full mailbag today.
let's do it.
All right. Let's start off with Kenneth. Kenneth wants us to take a look at APP, App Lovin'. I mean, monster move today. I couldn't believe that. I mean, this has been a stock that has been showing up in my work, Steve's
Is it
work,
ADPP?
APP app.
APP.
Yeah. And today just monster move.
Oh, wow.
What is up today?
There's a massive pattern there.
Yeah, monster base that it broke out from in September.
Let's look back. Yeah, if we look at that going well, like it got past 87, it looked like it kind of got, this is a weekly chart, so that was actually a long-term base there. A little flag pattern, broke out of that pattern, came back into it for a second, then just took off to the upside. Let's see how big that move is.
Today's 44%. But
Yeah,
yeah, from the
so
base or from
from the
that,
base,
yeah.
it's up 100. Let me take down the arrows. The big arrows are kind of ugly on here, so let's make them a little smaller. You can make them look really nice. So 157%. That's a pretty big move right out of that breakout zone. I mean, it's even bigger if you come back just right to that breakout. That's a beautiful move there. What does the company do? I've never really looked at it much.
I'm gonna guess something with apps, but we'll see. So AppLovin engages in the development and operation of a mobile marketing platform. It offers app discovery, Max, Adjust, and Spark Labs. It offers software-based platform caters to mobile application developers. Okay, yeah.
obviously makes sense why it's ripping. For me, one of the sectors that I continue to really like going forward, because a lot of people are going like, and even myself are going like, hey, we're going to move out of probably this big tech environment, but that doesn't mean I hate technology. I think software is probably the place a lot of people are going to want to be. This is one of the stocks that's really moving. I mean, the thing that happens with a lot of software stocks too is you see that they have these incredible trends and then they base, and then they have an incredible trend and then they base. So this is a really good one. The target, if you just take it based on the last couple moves, this would be probably a 5 wave. So this is a 5 wave. This would probably be one of the last waves before kind of a corrective pattern. If you look at Elliott waves, I really don't very much, but if you
no, hey, I like that you're talking Elliott here. This is good.
I really don't talk about them much. I know how to use them. I was a big Elliott wave guy until for me, it wasn't something that was repeatable. It's not a repeatable process, but it's a good way of explaining trends.
Yes.
And understanding that we're in the 5th wave here would tell you that there's probably a corrective pattern coming after this. So you might get another buying opportunity at this one. But for now, if you're long, I would just stay long.
Right, but you wouldn't get in here, right? I mean, if anything, you're probably looking towards resistance and where do I sell this thing, right?
Yeah, I mean, I would be looking either for that trend to change. I would, if I had a position, I would do this. If I had a position, I'd hang on to that position. I would just continue to move up my stop, keep moving up my stop, keep moving up my stop. But if I was looking at it today, I would say absolutely not. I wouldn't touch this thing. Not with a 10-foot pole, not with somebody else's money. So definitely would just kind of sit on the sidelines on this one, wait for a pullback, and then maybe think about it. But for now, it's a beautiful trend. It's a beautiful chart.
Spoken like a true trend follower.
Yep.
I like what you said there. And real quick with Elliott, I completely agree with you. When I was on the West Coast, a lot of the technicians there are a lot more in tune to Elliott, and I do agree with the general framework of Elliott wave. Like I do think the whole idea of 3 waves and the corrections in between, that kind of framework of first the early adopters or the people in the people in the know. First they get involved, that's that first impulse, then you get their profit taking, that's the correction, and then you get the institutions, that's the 2nd wave, then you get their correction, then you get the public, and that's that 5th wave. That's the craziest one, and after that the trend is over for a second. So I like that general framework.
Yeah, I mean, so for one thing that's kind of interesting about Elliott Wave, and we can move on after this, but this is kind of interesting. So so my company is called Against All Odds Research, and the reason why it's called research and not fund or newsletter or anything like that is because of a trader named Bill Dreiss. So Bill Dreiss actually was a very interesting trend follower. He actually used patterns to find signals. So basically, instead of using 50-day highs, 100-day highs, or Bollinger Band breakouts, whatever it is, he used patterns, and very few people do. But how he started on this is he said, I found Elliott waves. I'm going to figure out how to systematize Elliott wave strategies. So he tried to systematize Elliott wave strategies for a good 2 years. Couldn't find any way of doing it profitably. And so once he couldn't find a way of doing it profitably, he ended up doing his systems in another way. It's kind of basic old school Dow theory, where you take a higher low and then you buy after it makes a new high after a higher low. So it's a really interesting guy, but to me that was kind of there's probably no real way to trade this profitably. Mm-hmm. So I just don't really mess with it too much.
Yeah, exactly. It loses me at the nuances of the patterns, the small rules, right?
Yeah,
but let's move on here to the next request. This one's from Hanson. It's a 6-month time frame. He wants to look at RF. RF. What is RF? Regions Financial. Okay, so regional bank.
Okay, so on a
what a monster move in those regionals yesterday.
That was a large move in the regionals. So. And something, Steve's been talking about it. I've been talking about it for a while. I really like the idea and going all the way back to that thrust that happened when you get to July 2024. So just recently we had that thrust. We saw the regional banks finally make a big move. Financials have been making a large move. And then we saw the small caps make a move. So really it's telling you hey, something's shifting in the market. We're seeing a breadth thrust in these areas that we haven't seen a breadth thrust in for a long time. And now we're starting to see this major move in the market change. And now it's even changed even more now getting after the election, which I continue to kind of say, hey, we might not know anything for sure until after the election, because that's very normal for election years. But now we see these things really following through. This is making a new high. Is that an all-time high? That might be an all-time high. Let's look at
looks like it. Yeah.
No, not an all-time high, but
Oh.
it's a 15-year high at the least. So we got a 15.
With those financials, you always got to go back to 2008.
Yep. But that's the thing. A lot of these have, this is a quarterly chart, so this is going back really far. But if you look at a lot of the financials, like you always have this kind of trend start to happen where under the surface, these things start to build and everybody's not paying attention to it. And everybody's also thinking the same thing like they thought in 2008. People are fighting the last war. 2008 happened, market crashed. Therefore, the banks are going to crash today. And it just hasn't happened. So once again, I find these areas as there's a lot of value. There's a lot of things to buy in here, a lot of new breakouts. And even something like this, even though it's pretty extended if you look at it on a weekly chart or a daily chart, it's probably, if you're a long-term investor, I don't think it's a bet, or trader. I think of myself as a position trader, someone with a 6-month to a year time frame. I don't think it's a bad idea to buy this thing.
Yeah, I mean, this looks like a nice one. Heading into the election, I was trying to get filled on M&T Bank, another regional bank setting up, and didn't get a chance to get in that one, but took off without me. And similar setup, multi-year base that it's coming out of.
I think this is generally one thing that's very hard for people to do as traders. And I mean, no matter what, because you go to the grocery store, for example, you never say, hey, I want to buy the oranges that are the most expensive oranges because that's going to be the best for my profitability. You never think about that. But if you think about it as a trader, like sometimes you want to buy the things that are expensive, because expensive means that people are interested in it. People want to buy this thing and people want to be in it. So once again, you have a nice uptrend. You have it making a multi-year high, actually a 15-year high. It's probably worth taking a look at. I like this one.
Yeah. So above what price? Give me some levels.
Above 25.46. 25.46, I would say it's worth owning.
6-month time frame.
6-month time frame, worth owning above that level. Breaks below, there's a couple different ways you can do it. If it breaks below that level, you could have a stop loss that's all the way down here, basically around this $23-24 level, depending on your time frame. Just because you never know, that could come back into this level pretty easily. Or you could sell out of it under 25.46 and then get back into it if it gets back above it. I like the idea of having a wider stop to do things, just because it makes your win rate's going to be a little bit higher. It makes it a little less stressful to try to trade it as well.
I like it. So let's rip through the rest of the mailbag here, because we got some lovely people in the chat with some good tickers I want to get to. So next up, we got Paul wants to take a look at Freshpet, FRPT. Looking to take a position, but it's had a nice run up. It looks like 154 is a reasonable spot. What do you think?
54. Let's see. Let's go back further. I think, let's look at a monthly chart on this one. So if we look at a monthly chart, we are seeing a couple different ideas here. So basically, we're going to run into some sort of resistance coming up pretty soon. And that's one thing to keep an eye on, but that's a really long-term chart. We're going back to that peak in 2022. So it might see some resistance there, but if you're long, did they say anything about time frame, Patrick?
He did not, no.
So if you're a long-term trader, sure, there could be the idea that we could get into some resistance, but if you're long-term, I'd say there's nothing wrong with buying it. It looks like it's had a band squeeze kind of set up here. So meaning that the pattern got very tight, it's low volatility, and then it just broke out of that band. And so once again, that's kind of telling you that something's changed. Low volatility to high volatility is a good pattern. So low volatility brings high volatility, and high volatility brings low volatility. And what that means is, if you get this type of a breakout here, this is low volatility, usually that's going to be a big move. So think about Bitcoin. Bitcoin recently just had one of those. It just got out of the largest band squeeze it's ever had in history. It breaks out of that move and it's not looking back. So you could see something very similar set up here, where it just breaks out of this move and it doesn't look back. So I like it. An easy way to look at it is buy it above 157.75, and then once you get into that, using a trailing stop or something, depending on your time frame. Um, if you're a short-term trader and you're looking for targets, the next target would be 187.44.
I like this one. But I think you got to be patient with it and just really wait for it because it is going to set up for a real nice trend once it breaks out to once it gets above 190, those all-time highs, and then it's really going to be nice. But
Yes.
who knows? Maybe it gets there and then builds like a little handle, like we've seen a lot of these stocks do. So I think patience. One day this thing's going to really set up for a really nice trend.
Yeah, I mean it's a smiley face. Once again, you're not buying something bad either. Any way you look at it, if you did buy it, it's not a bad buy. But I agree with Patrick. Wait for it to really get above those levels, and then it's really going to take off. Or if you're a short-term trader, just look for that next high there that we just put out there at 187.44.
I like it. All right, so we got two more in the mailbag, and then we'll get right to the chat. So Argentina. Nick wants to look at Argentina. Um, yeah,
I got you on those tickers.
you know that one.
So I love the idea of buying Argentina. We've been long Argentina in our fund for a long time.
Is it
And
the
the
best
reason
international market? I'll look while you're.
it is still, I think it's still number one. It couldn't have gone down because it was so far ahead of everything. It's probably still number one year to date.
Yep, 45% year to date. The next best is uh hold on. EPU. What's
Peru.
EPU? Peru?
Yep, Peru.
Oh,
So
wow.
Peru's right behind it. So it's interesting. So what you're seeing here, and this is something to pay attention to, and for you guys who are looking for things to buy that are outside of the United States, there's something happening in especially Southern South America. There's a lot of these countries that are starting to do very well. We're starting to see a lot of movement inside of their stocks. A lot of these countries are have a lot of resources. They have a lot of financial companies. So as you're in an inflationary cycle, not saying inflation's out of control. We're all gonna die from inflation today. I'm not one of those guys. I'm just saying we're in an inflationary cycle. You're going to see a lot of those countries doing a little bit better than other places. So as we're seeing that, you kind of want to look at something like Argentina and go, okay, I would like opportunities in that when it comes up. Right now, I wouldn't say that's an opportunity. That's a massive uptrend that it's been in. But once again, I think more and more investors, and this is something that could be a fun little conversation, Patrick, which is more investors in the United States need to look outside of the United States. Nobody looks outside the United States at all these different countries and different sectors that they could be buying. And some of these are ripping to the upside and making a lot of money. If you look inside of it, some of these stocks are going up 200, 300%. So there's a lot of big moves inside of there, a lot of companies that you probably would like to be interested in. So continue to look outside of the United States. There's a lot of opportunities out there.
And on that note, in the chat here, Mark just brought up TGS. He says one of my favorite Argentina names. Pull that chart up. That's a nice one.
Yeah. So another beautiful trend. I mean,
All
if
the
you
way out.
continue to look at these international stocks, they look
You gotta go out to
amazing.
like 2018. Oh man, you're going on the quarterly.
I'm going all the way back. Let's go all the way back. So if we're looking at that, yeah, it's making. So he was pointing to 2018. That was the last time it made a high. A lot of these stocks made their all-time highs at the same time as Volmageddon happened in 2018. So you saw that crash after Volmageddon. A lot of them didn't recover for a long time. Now they're starting to recover because once again, the cure for low prices is low prices. As these things get very low and people aren't interested in the area, money starts to come in, things get bought up, the economy starts to tick back up again, and you're seeing these companies doing really well inside of Argentina. So I guess what you're talking about is buying that, or the person who wrote in for this chart, which talking about buying this all-time high. I think it's a good buy. I think it might sound kind of crazy to some people, but
No,
I would rather buy highs than buy lows.
no, listen, and it's worked out well for you.
Yep.
And yeah, that thing looks great above 23. But let's take a look at Twist Bioscience. Biosciences, and then we'll hit the mail or the chat.
What's the ticker?
TWST. We get asked about this one a lot. Probably once every other show.
Let me get back to weekly.
It's a
So
little
here's
head
the
and shoulders bottom there.
Yeah, so I mean, it looks very similar to a lot of and this is something that I'm sure you've talked about with Steve. I'm sure you talked about with the other guys, but something that a lot of us as technicians continue to buy is these patterns that keep coming out. You see this bottom, we're coming out of this base, high or low. You could look at that as cup and handle or head and shoulders, however you want to do it. It's an ugly head and shoulders or ugly cup and handle, but it works. And then so once we get out of this range, this is when you would want to, the first buy signal you would probably get, and then you would hold it. Now, once again, that's a huge pullback that happens. So understanding the volatility of each of these products is a good idea. So if you're going to buy this thing here and try to hold it for 5 years, understanding that a pullback could be massive inside of that. I mean, let's take a look and measure that. And I think this is something good for all traders to do, is just understand the volatility of every product you're trading. That's a 30% pullback. So it'd be very hard to hang on to that thing. But if you could hang on to it, that's how wide your trailing stop would have to be, or you'd either just get out and back into the position again. But back above these levels, I think it'd be a buy again. What do you think, Patrick?
I think so too. I mean, when you say these levels, I'm looking at like 58.
To 50.
58 would be a kind of break out of that head and shoulders. Call that the neckline if you want. And then I'd say
you're looking at the big neckline. Nice.
Yeah, then I'd say probably 90.
Let's look at that. Yeah. So a little oops, broke out of that. Came back
Oops.
in. And then, yeah, so getting back above 53.96 to be really safe, above Patrick's level, around 58, 81, 59 even. That would be the
safe.
Yeah,
and again, yeah, it is a little bit conservative there. If you want to, jump it a little, I wouldn't hate that, especially because you already had that failed move, right?
Yes. I completely agree with that. That the failed move usually means it pulled back, it got a little bit ahead of itself, but it usually catches up and starts to move higher after that. So, a very aggressive trader could buy it here around 47.97, 48 to make it easy. And then more conservative outlook would be over 58.81.
I like it. So now we're moving on to the chat. Let's get your thoughts on REITs. So REITs, man. So we had that monster ripper in yield yesterday. Yield ripped higher to a 4-month high. And that put a lot of pressure on REITs. REITs really struggled yesterday. So what do you think?
So as a bond guy like I am, so the first thing I ever did in finance was just working with bond traders, trying to understand that market, which took a long time to just understand in the first place, but just understanding how it affects the broad economy, and most importantly, how it affects the stock market and stock market sectors. When you see a lot of pressures on yields, or you see inflation moving higher, you're going to see sectors like REITs start to do poorly. So in this environment, I'm not sure if I would say, hey, REITs are probably a good buy the dip here. I would say if you're a long-term investor, there's a couple ways to look at it. So I'll go through all three of them. One way to look at it, long-term investor, you want something in your portfolio that's going to give you a nice yield, isn't going to lose a ton of money over time, and could do well in most economic environments. REITs are a good thing to have if you just want to hold it in your portfolio. As a trader, a position trader, swing trader, sure, you could take a swing at it, but I would just stay away from the sector unless I really saw it just ripping. Once again, it did break out of this kind of zone. You could buy it, but really this type of environment, I would just stay away. But a short-term trader, sure, if you're looking for a small pullback and you want to take a swing at it, back to these levels around 44.87, 45.27. I don't think there's anything wrong with that. I just don't think it's set up to make a really big move anytime soon.
Yeah, I think you really need yields to cooperate with this one. I mean, when real estate did have that nice move, that was when yields were pulling back between the spring and the summer there. But one REIT I did buy recently was DLR, if you could pull that one up. So DLR is it's one of those data center REITs, and it had a bit of a stumble for the first few days, but but it's shaping up decently again. I think some of those data center REITs are some of the best ones in the bad neighborhood, right?
Yeah, no, that's a good way to put it because it's like when we talk about tech or you talk about something, there's so many different areas inside of these things. So if you're looking at REITs, you're looking at digital REITs or something, like there could be some upside in there. There could be some sectors inside of it. Speaking broadly is more what I'm saying is I want to stay
Yeah.
away from the sector, but there's always value somewhere inside of a sector.
No, I think you explained the relationship with interest rates very well. Another one I really like here that SW in the chat here asked about is SoFi. Let's take a look at that one.
Ooh, that's a move. I made a funny noise there too because that's a wild little move there. So let's take a look at that.
And $10. This was a SPAC, I want to say.
Yep, at one point. Yep.
And $10 is always a really important level for for SPACs.
That's interesting. That's something from what was it? William O'Neill said in his books many years ago.
Really?
$10 for the CanSlim guy, the guy who created
For stocks broadly, or was
yes,
he
for
talking
stocks.
about?
So he was talking about small names that were under $10. Getting
Yeah.
about that $10 level being very important, and this is when they usually move.
Yeah.
Looking at SoFi, I agree. I mean, it looks like it's performing really nicely. It's something that I think it's a really good stock that a lot of people have a lot of feelings about in a bunch of different areas, but really
Yeah.
it looks like it's winning right now. It looks like an easy thing to buy and to hold. And just really, when you see a trend like this, you just kind of want to move up your stops and kind of sit on your hands. And it's hard to do that, but that's important.
Yeah.
How big is that break?
Check. Short interest 17% on this one, Jason.
Wow.
That's not bad
Yeah.
for a stock that's hitting multi-year highs.
And so you could continue to hold this thing and probably buy this thing again. I'd wait for some sort of consolidation, some sort of pullback to do so to support if you're a short-term trader. But really, this thing could be one of those that just moves, into $20 into $30 pretty easily.
Yeah. So James wants to look at STAG. STAG. You familiar with this one?
Yes, I am actually. It's an old industrial. I think it's actually been around for a really long time.
Oh yeah.
It used to have a different name back in the 2000s. I can't remember off the top of my head. But yeah, this is industrial. So I definitely like the industrials, but these are things that I would kind of stay away from if I'm seeing waning momentum. I'm seeing that it's not able to outperform the sector.
Wait, am I looking at the same thing? It says this one's a real estate investment trust, a REIT.
So I'm on STAG. What are you on?
Yeah, STAG. It says it's a REIT.
Yeah.
Interesting. I'll look into it.
I have no idea, but I know the chart's the chart.
Yeah.
It looks like it's one of the old industrial companies, and it used to have a different name, and it was something around like Hogs or something. I can't remember, but once again, just looking at the chart, what would I do with this stock? I probably wouldn't want to own it. There is no outperformance in it at the moment. If I was looking at it and looking at relative strength, if you look at the industrial sector or the REIT sector, even it's not outperforming either. So I would want to kind of stay away from this thing, especially because we just saw industrials rip over the last few weeks, and now we're looking at this thing just has been moving down the whole time. That's saying that something's wrong with this stock. So I would just kind of stay away from it. It's underperforming the market and the sector, and it's obviously moving down. I think somebody would probably look at it and go, okay, this is a higher low here. I could buy it. Sure, you could buy it for a swing up, but I'd rather look at something that has a nice consolidation pattern and then a breakout and then buy that breakout and then be in a trend like that than try to buy dips all the time. It's very hard.
I would agree. Yeah, very well said. So Donovan wants to look at PRU, and then we got one more, and then we'll wrap it up. Oh man, this one. Nice, Donovan.
I like that. Yeah, so if we bring this here. So it looks very similar to most of the sector or most of the S&P 500 or most of the tech stocks. You're seeing this pullback that happened in the beginning of August for the yen crisis, whatever you want to call it at this point. There's a million names for it. And then you see this W bottom that ends up turning into a flag, which is pretty nice. So we see a flag or a pennant pattern, however you want to draw it. And then we got up and over all major resistance. And then we came back down into it. Now we're getting right back above it again. So this is a buy right here, right now. Nothing else to do than just buy this thing. It's over. If it's over 124.85, I would say it's a buy.
Yeah. And Jason, what you have here, I have this drawn as the handle, and then you zoom out, you'll see the cup. But it's resolving really nice out of a
So here
6-year base,
yeah.
6-year cup and handle.
Yeah. All right. So go out further, like a monthly?
Yeah, sure. Yeah, you could draw this like a cup and handle. I mean, that's a big, deep cup, and then see what I'm talking about?
Yep. So here's the cup. Sadly, that's the one thing TrendSpider doesn't have. It doesn't have a way to draw that. So
really?
Yeah, they have some custom way to do it. I just haven't messed around with it enough.
Yeah.
So here's the big cup.
Yep.
And then here's the handle. And then here's the breakout zone. So it's ready to buy. I like this one. This is probably one of the best charts from today.
Yeah, I actually really like this one as well. There were a lot of good ones though. We had a lot of good ones. What was your favorite one? We usually do this at the end. Actually, let's do one more and then we'll wrap it up. Kevin wants to look at Wolf. WULF. There's a few different wolves that are
tracking the weekly. Right now. Let's get to the weekly. Okay. So this is another one that's pretty interesting as well. You could see that we still have this. We continue to kind of consolidate, move higher, consolidate, move higher. Got to hit that again. Lost it. Consolidate, move higher. It looks very similar to KRE. Kind of see that consolidation, then that breakout zone.
I could see that. I see what you're talking about.
Yeah, and so it kind of looks like just another small cap with some outperformance, though. I mean, that's a big move from $5 to $8. So once again, this is a way to generate alpha on a very similar trade. So I definitely like this chart as well. Would I buy it today? Probably not.
Are you much of a Fibonacci guy?
No, not really.
Okay. He had asked to see some retracement levels on it. Now that Bitcoin had broken out. I have a feeling they're probably right. I mean,
retracement levels on this one?
Yeah, the retracement. So, okay, right around 17.
Mm-hmm. Yeah.
Yeah. I see what you mean about KRE though.
Yeah, it looks
so
very
Jason,
similar.
what was your favorite chart from the day? Just to recap, we had AppLovin, we had RF, Freshpet, Argentina, Twist Biosciences, STAG, SoFi. Oh, I missed BTBT.
So setup wise was just the second to last one that we were just on. Actually, that was probably the best setup. The big cup and handle that you were talking about. What was the name of that?
Prudential?
Yes.
Yeah.
That was a really good one. My favorite to just see is somebody actually bringing up Argentina and then a stock inside of Argentina.
Yeah, that was a great one. TGS. Yeah,
yes,
that was a good one too.
Very surprising to see people bring up stocks inside of Argentina or international stocks in general. So kudos to you for actually looking outside the United States.
Shout out Mark Zerby.
Yeah, so I found out over the years, getting good performance and outperforming the market for me has always been finding things outside of the United States or things nobody else is looking at or investing in. So I really like that idea of like looking at something like Argentina and saying, hey, this is doing really well. Maybe I could find some good stocks inside of there. So thanks for bringing that up. That made my day.
It's hard to get alpha when you're just buying NVIDIA, right?
Yeah. Sometimes.
All right. Well, everyone, thank you guys so much. If we didn't get to your idea, be sure to shoot us an email at questions@stockmarketmedia.com and we will get to them on Tuesday. But other than that, have a great weekend. Make some money out there. And Jason, thank you so much.
Oh, thanks for having me on. It was great to hang out with you guys.
Cheers.